Greetings, everybody. This is Jeff Scott, and this is my weekend update for July 1st, 2018. I've entitled it Walls of Worry. It's funny, last week when I did the report, I was optimistic based upon chart patterns, but I commented news might change my mind. And in fact, I remember I went on the Discord board early in the day before the market opened. Let's see if I can find it. I don't know if I'll find it here or not, but I basically came out and put out a comment saying that I was taking off my recommendation because I thought, here it is. We got the news that mentioned would determine market direction, futures down big. Trump escalating talk on trade barriers and tariffs. Trump wanting to block Chinese investment technology. That one appeared to be overstated, and that's probably why the market rallied some the rest of the week, some meaning it went sideways. Hopefully things ultimately resolve favorably, but the type of ranting will certainly lead to increased volatility and short-term lower prices. And that's kind of what we saw. Monday, the market fell hard, and then I'll show you how it went sideways the rest of the week. So as I always say, these reports are as good as they are until the market opens up. And news can happen in between now and then that will make this report sort of invalid. It's 2:48 on Sunday, so futures are not open yet. As always, it's for education purposes only. Anything I recommend is a spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I'm not affiliated with any software vendor or trading company. The tools demonstrated are those that I use in my daily trading. I paid for all the tools I demonstrate. Trading involves risk. Junior owner is solely responsible. I have a lot of influences. These are the ones that have impacted day to day. I started with canceling as propagated by O'Neill, improved by Morales and Kocher, taken to the computer by Ian Woodward. And Ian's no longer with us, but Ron Brown carries on with a lot of Ian's work. And Ron and I diverge a little bit, and we're both sort of the two of the Uber users of HGSI, where he's gone on more of a VSA approach, and I tried to stay more with the traditional impulse indicators. Now, I found Cancelim and HGSI a great tool in helping me understand what to buy, top-down review, etc. It's still my go-to tool, despite other tools that I use. And I learned from John Person over the right how to actually trade. He's got some great indicators. There's a package on a trade station that I don't ever buy or sell without looking at the impact of that package on a stock or ETF or a future. It's great books. He has some free indicators on Thinkorswim. Very complimentary, helps me get the list of stocks on the left, and John teaches me how to trade them. Van Tharp is the god of position size and money management, very consistent with what John teaches. George Lee, a great trader in Western Canada that I had the opportunity several times over the last decade, many times, to share the podium with. And then Sager Sager, who is from Superior Profit, and he participates in the board. A top-down approach to the market. He has some unique indicators that I've incorporated into TradeStation and into Metastock. Like his stuff a lot. And he has some market ranking tools as well. HGSI is still my go-to, but as I've always said, I use other tools as well. I need certain things on my desert island. I need my Thinkorswim or TradeStation because that's where I do most of my analysis during the day and trading. I need my HGSI because that's where I do most of my post-market analysis, and as well as EdgeRater. I do some seasonality work and a number of websites I like. I am independent. By being independent, I mean I do not receive any money from anybody to talk about them, and I've at some point paid for every tool that I discuss. HGSI, here's the website. There is a free 30-day trial, does not require a credit card. And under investing strategies, you'll see a number of videos by Ron and I, as well as others. Why do I put this up there? It's simple. I think it's a great program. I want to see them be successful. I think using the program can make you successful. And I might do unofficial, unpaid volunteer support. And I think it's a great product. Stock patterns are cyclical. I'm a broken record. I keep saying we live up here. The minute I think the market's done, it goes back up. The minute you think the market's going back up far, it goes back down. So we are in almost not quite a Darvas box, but it almost feels like a Darvas box where we can't break out to the upside, but we haven't broken down fully as well. And I don't think that's changed for the most part from last week. Unfortunately, still very much news driven. Therefore, I've raised cash, taken smaller positions, sold premium above and below my positions. So that helps me deal with some of the setbacks in the market. Friday sector review. No, I don't expect you to be able to read this, but if you could read this, you would see that materials showed some strength, energy remained strong, but not so much services. So oil producers and XLE are red, but the services, are green. The services were red. Financials have been weak, especially regional banks, insurers weak. Here we see brokerages also weak. Credit cards mixed. Industrial showed some strength. Technology strength. Semiconductors mixed at best. Consumer staples mixed to weak. Discretionary looks stronger. Retail, I'd say that's mixed to weak. Utilities mixed to weak. Healthcare mixed to weak, although biotech showed some strength, surprising strength on Friday. Transports were strong despite high fuel prices, but a lot of the airlines I looked at the weekend did not look very compelling. There was some softness in the dollar on Friday, and you could see metals. Gold miners were up, as were silver. Home builders with rate softening showed some strength. There also was some good earnings from KBH and Lennar this week. REITs remain strong, as do casinos. Maybe Wynn is bouncing here, something you might want to look at. So I always look at this intraday. It's came with a package from John Person, and in that package, he had a lot of indicators. The package looked like this. And I said, that's nice, but wouldn't it be nicer if I take out the indicators and just get a sense what the market's doing? So this is on my computer all day long, and I just take a quick look. I have to update some of these stocks that are no longer trading, but it just gives me a sense where money is rolling. One thing that John taught me was when you start to see 2 or 3% moves in every stock within an industry group, and that there's money either flowing in or flowing out pending the direction. So I look at not only is there a preponderance of one color, I start to look at gold miners, 2.9% for, well, it's copper for Freeport McMoran, Newmont 1.92, American Barrick Gold 2.2. So maybe something is happening there that we need to be paying attention to. I like to look at Thinkorswim to take a look at the major markets. So let's just go take a look at that right now. Take a second to do that. I forgot to do this before. And let's go into this upper right-hand corner on the individual chart. It should open up a thing that says maximize sell. So I guess I could probably start killing all these drawings. Take these off. Remove drawings. Put our drawings on. Yes. So here you clearly have the low of the market on the lower left-hand corner of a year chart. It peaked in January, and it's been in this formation, was in a triangle that it broke out, but it's now returned back to where the breakout point was. Yes, it's going higher. It certainly has lost a lot of the momentum, this being the E-minis. Still above the 200, closing right on the 50. Sort of an interesting pattern. Tried to trade higher on Friday and closed right where it began, which is pretty much no different than where it was the day before at the close. Now, what's also interesting to me is this was Monday's big sell-off. And then you could see after Monday, the market pretty much ended up sideways from the close on Monday to the close on Friday. I think there was 1 point difference. Bullish, bearish, I mean, it's stalling. I can't say anything more than that. I'm losing my enthusiasm. Let's do the same thing here. Let's reset the drawings because they're getting old. Okay. So I hit the wrong one. Try again. Remove drawings. Old drawings. That's not what I want. Did it right the first time. So at the high, the low of the year was in February. Let's give this a full year like I did on the E-minis. And you could see the low of the year was back at the beginning, which was a year ago in July, right after 4th of July. Nice summer rally we saw last year. This is the NASDAQ futures. We pulled back to the 50. We're in a PPS sell signal, hit a recent high up here. We'll talk more about the states of the market. Again, looks a little stronger than the E-minis, but it too looks like it's stalling out here, at least today. Let's do the same thing. Let's kill my drawings. All right, let's take a look. So you can see here on the YM, the Dow futures, we hit the low a year ago, has been a steady uptrend from the beginning of July to the end of January, which fortunately for me coincided where I took a lot of profits to buy my boat. And now we're sitting right below the 200-day moving average. Clearly, of the three I've looked at thus far, this is the weakest of the bunch. But, you know, it hasn't decisively broken below the 200. It's neutral to a little bit concerned. Still, you know, same thing, losing momentum, but really hasn't declared itself in my mind to the downside. And then if we look at Russell futures, let's do the same thing. Let's go to a little, give a year's worth on the chart. Russell's bottomed in August. And like the NASDAQ, they are a little bit stronger and they are above the 50-day moving average. So my gestalt here is at best case stalling, perhaps topping. If I look at the VIX bounced up this week a little bit, but really didn't go too far. Still kind of in this consolidation area, although it used to consolidate in the 10 to 12 range. So the VIX is a little higher than I'd like to see if I was bullish. And then this is interesting. The dollar had a tough day on Friday, and that obviously will be good for gold, oil, and anything you can touch in commodities. Now, I also like to look at the weeklies. I think you can learn a lot from the weekly charts, and it takes out some of the day-to-day volatility. So usually when I look at stocks or I look at indices, I'm going to look at weeklies as well. Same thing, let's maximize the sell. And lower left, upper right has not broken down. This is the E-minis, certainly stalling. Maybe I'll start to think about drawing a triangle, and we'll see, or a wedge, stalling. Not done, not dead, stalling. Here's the NASDAQ futures, just 1 week off the high, more bullish than the E-minis, but certainly pulling back, pausing, stalling here. If I look at the YM, doesn't seem like there's much there. So you can see the same thing, peaking in late January and going sideways. Pull back here to a very important part, which is the 50 weekly moving average, which is held multiple times going back. And in fact, several of the times where it held, it became a buying opportunity. So we'll see if this turns into a last line of defense before the market rolls over, or perhaps a buying opportunity. The Russell, hard to be too disappointed here. Shooting star on a week ago, last week sold off. Still in an uptrend, probably the best of the bunch, and well above the 17 and the 50, which is above the 200. Looking at the weekly on the VIX, you can see that this week it tried breaking out. We'll have to keep an eye on that. Obviously, a breakout on the VIX will be bad for the markets, at least short term. And the dollar failing again at the 200, probably good for commodities. And wouldn't surprise me, hint, hint, that we might see some strength in gold when we get there. So, I'm certainly not uber bullish. I got unbullish before the market opened last week. Hence, when I put that Discord note on, which was at 6:52 a.m. on Monday before the market opened. Market's tough right here. Will we get a summer rally? We'll take a look and see what we think. Back to the slides. And then, sometimes I like to just look at my Genesis. I use this more for futures trading, but you can see the first column is E-minis, and the NASDAQ, then the Russell, then the NYC, and then the Dow. And we have daily, weekly, and then monthly. The monthlies look strong. The rest looks very choppy. That's how the market has felt. Now, what some of the news underneath the indexes? Well, first thing we'll look at is rates. The 10-year and 30-year, you can see the market sold off a little bit in yellow, but notice that the rates continue to drop. Falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. As I did my bottoms up looking at a large number of stocks, I saw plenty of REITs, MLPs, a few utilities, dividend payers like PGX, which are preferred stocks, and some of the home builders, which also had some positive earnings. Banks, regional banks, insurers looked dismal. So if the Fed is raising rates, and I'm concerned about how many times they're going to raise, because I have some money tied to LIBOR that I took, that actually won't say what I do with it, but it's cheaper than margin rates, let's put it that way. And it's been incredibly low. Why is LIBOR going up and our interest rates dropping? Why is the yield curve flattening? Does somebody know something about our economy that we don't know? Be interesting to see. Right now, I can just say the rates have softened. The AD lines are in white. The indexes are in yellow, both the Russell 2000 and Russell 1000. A little teeny weeny drop in the new high, new lows, the AD lines, while the market sold off a little bit sharper. That might still be a bullish thing. If I look here, you could see the AD line on the NYSE, just a little drop, but you could see these major market ETFs, the diamonds, the Qs, the spiders, the IWM, and transports, as you can see them up here in the upper left-hand corner, all pulled back sharply, while in the setting of a pullback in the market, bonds rallied. Now, if I look at breadth, stocks above the 200-day, stocks above the 40-day have both dropped, weaker but not oversold. And then my 3-month new high, new low, which if you have TC 2000, so 2121, I always get concerned when it moves up here, like clockwork, it reverses. It reversed earlier than I'd like to have seen it. It had a pretty big drop, so that gives me less concern here, and that a bigger pullback is imminent, but it's neutral. When I start to tip this intra-week, I know the market's pulling back. We've already pulled back. The signal is no longer giving me any concern. The daily McClellans, I look for zero-line rejects. I look for extremes. I look for divergences. We're not at new highs. We're not at new lows, so I can't say much about divergences. I don't really see a signal from the McClellan. Didn't see a zero-line reject here. Maybe one down here on the weekly. We'll watch and see what the market does. Right now, I don't see a huge signal from the McClellan. To me, it's most helpful when I get a spike down in the market and I get the McClellan showing me very oversold or overbought. We did see in this rise up here some divergences, which was concerning. Other things that give me a sense of what the market's doing, these are the buckets. These are taking the stocks, the S&P 1500, looking at every one of them within their Bollinger Bands. How many are above the midline, a third versus 2/3 below? That is bearish. And then how many are at extremes? We've got 9% below the lower Bollinger Band. That's not yet an extreme, but maybe we'll get there in a couple more trading days. So it's very bearish looking here. If I look at the HINDYs, we did not see a HINDY this week, but there's a reason for it. There's just very few new highs and new lows, and you have to see both to get the HINDY because it's showing you some significant disruption in the market where the major players are selling to the minor players like us, the weaker hands. But we are still working off some recent HINDYs about 2 weeks ago on the NYSE, which is the more classic place to find them. Market tone, which is the Woody indicator here, has gone significantly bearish, except for the Dow is still yellow. The rest are red. And sector strength, weakness led by healthcare and technology were the weaker sisters. So I got to change that. It's not sector strength improves, sector strength weakens. Oops. I do these, I proofread them, I spell check them, but if you spell it correctly, you just have the wrong direction. It doesn't show up on spell checker. Canaries in the coal mine, obviously price line is now called bookings. This gives me an early warning signal. Look at the gap down on Monday and how it went sideways. It's consolidating sideways on the Canaries. Look at the melt-up leaders. These were the leaders earlier this year at that market peak, a week before the peak. They broke down pretty hard this week. They broke down through the 50, continued down, and now they're consolidating maybe underneath the 50, but clearly broken. Know your news and earnings. Still a lot of stuff this week, despite the holiday. I have to say it, I hate 4th of July falling on a Wednesday. Your weekend before, your weekend after are great, but most people have to work 2nd, 3rd, 5th, and 6th. ISM manufacturing on Monday could be important. Thursday's got weekly jobless claims. ISM manufacturing for June looks like non-manufacturing, I'm sorry. And the FOMC minutes give insight into what they think about the economy and the number of future hikes. Could be market moving. And then we got, as John Person refers to, the monthly unemployment reports on Friday, July 6th. From an earnings perspective, this is really the next 2 weeks. We're near the end. Some things that I'm going to be looking forward to hearing about are going to be Bank of the Ozarks, a regional bank, to see if we can get a sense of what's going on with regionals, how the interest rates are affecting them, a number of banks later. Emphasis has been on fire. And then Delta Airlines, how's the impact of higher fuel costs on the airlines? Market thoughts, we have a continuous wall of worry when lots of worry days, the market goes down, little worry days, the market goes up. It's tough to trade these and find a trend when a tweet from 30,000 feet in Air Force One moves the market. We got trade wars, we got immigration, we got Korea, are they complying or not? We've got Iran, are they enriching? And we got rising oil prices. Market closed down last week after huge drop on Monday on trade war news, but traded sideways for the end of the week, with the S&P 500 closing 1 point off Monday's close. Seasonality, you saw what happened last year. We came up from this period of time, but ongoing tweets, protests, and news may continue to see current market volatility. And while the pros start to head to the Hamptons for their vacations, that may cause some volume dropping and low volume, plus volatility can be some pretty wide swings, so be careful. Usual agenda, let's take a look at some charts. Now, at 6 months, it's not unreasonable to take a review of market performance. And I expect that everybody has some way of tracking what they do. I do a lot of trades, and I track my trades in GainsKeeper. That's not the one I wanted to show you, but I could pull that up. But I'm able every week to look at what I'm doing. It gives me a sense of my positions and what's going on in the market. In GainsKeeper on the website, I'm able to see if I can find the one that I wanted to open up. Is this it? Let's see if this is it. On GainsKeeper on the website, I'm able to look every day at my open, closed positions, look at my concern about whitewash sales, which I have no concern, get a sense of what my taxes have to be. I can tell you for this year, the 2 accounts that I'm managing, I'm up 50% on my large account in TradeState and Thinkorswim. I've shown this before, so I'll show it again. I I've given up a couple $100,000 to be honest, but I'm still up 1.265 million on a $2.5 million base. Took some cash off. I've got some more cash I want to take out. Got some taxes to pay. So I'm up 50% on that account. I'm actually up over about 140% on my Schwab account. But it's not really that big of an account. It's been a couple of super trades like Tandem Diabetes. So I know where I perform. Let's just say 50. Now, some people add up individual trades. I don't get it. To me, how much money do I have today versus what I did yesterday? How much money do I have today versus the first of the year? That's what I measure. If I'm up 50% in my account, then I'm up 50% on an annualized basis, up 100%. That's how I do it. People will do. I know John likes to track his individual trades, which is fine too. I track my account over a period of time. Here is EdgeRater's warehouse view, and it gives you a chance to look at how the market's doing with certain variables. Now, ERG is earnings per share rank, relative strength rank, and group rank. And you can see if you take out the tails, because there's very few stocks, and the head, where there's few stocks, there is a hint that higher ERG is winning, and you could see stocks up here with a return of 18%, while the low ERG stocks have closer to a break even. So ERG seems to matter this year. I'm sure that's partly why I'm outperforming. EPS rank, higher EPS ranks seem to drive higher returns. This is the return. This is EPS rank. This always amazes me. High relative strength rank has a good return, but so do a lot of stocks that were losers last year. And then group rank over 6 months seems to not matter. AD line, now this is fundamental data that I captured. Let me put it in here. Based on fundamental data, December 31st, 2017. So stocks that were poorly performing at the end of last year have actually outperformed this year. I suspect that's about energy. And you can see a little bit about the boxes. So this gives me a sense of what the market is doing. I could compare this to another year. Let's look at 2017. This was using fundamentals on December 31st of 2016. And how did those fundamentals predict the market? It'd be better if I updated the fundamentals every day, but I don't have a program that will do that. And these are made, as you can tell, in the upper left-hand corner. And maybe this one didn't happen. Oh, yes, it did. By EdgeRater. You can see last year was sort of crazy year. There's really nothing to me that says high ERG did better. EPS rank matter, but relative strength did not matter on the year. And stocks that came into the year with lower accumulation distribution, as you can see here, outperformed. So let's look at more normal of a year feeling thus far. We will see where we end up. All right, so I start my analysis every week doing the same thing. I've got a sense of the market. This is my market. At best case is neutral with concerns. And that tells me not to take a lot of new positions. If I take them, take small position sizes. I start by just quickly review that. I download a lot of lists. These are lists that I download from various places. Some are from MarketSmith, some are from IBD. I'll add to this some lists from VectorVest. I have some lists that I bring in from TradeStation. TradeStation, I do a series of scans every night. And I will bring in from these scans as well. High Close Doge Weekly is one of my favorites. And I build a super watch list. That super watch list, and this is what I do on the weekend, much to my wife's chagrin. That watch list ends up turning into 636 stocks that meet my criteria of price and volume. And then I will put them into a scorecard combo, which ranks them to the top, technical and fundamentals. And then I will go through and look at each one of those charts. I then get a buy watch list. And from that buy watch list, I will then take this list, bring it into TradeStation as well as with the weekly high close dojis. And in TradeStation, I will go into my screener. This is just what I do. It's a little bit more than what most want to do, I think. And I will look at each of those stocks on the buy list in my screener, and then I'll come with the stocks that come to the top that I have the most interest in. And then I'll take this list and I will put it into my radar screen, which is the strength of TradeStation, and I'll be able to watch these stocks. This one doesn't belong, so we remove that one. And I'll watch them looking for whether they're relative strength signals, whether these are the things from Sager, whether it's high close dojis, PPS signals from John Person. And then as I move to the right, I don't need these two, so this one, let's pull this out. I have earnings dates, and then I have stocks in a squeeze, pocket pivots, viable gap ups. We see we had a viable gap up on KBH on Friday after earnings. I actually had some shares of that one. Mobile breakouts from a squeeze, and mobile breakdown from a squeeze. I can't remember which is which, so I would open that up. And that's a breakout. I can't tell, that's a breakout. All right, that's the breakdown. This is a breakout over here. You should see what this looks like on a big monitor. On my 27-inch 4K monitors, I'm able to have this entire screen and then sorting by the various things. But that's how I take it and do it during the week. On the weekend, I look at all the charts. So when I looked at the charts, the first thing I do is a top-down review, in which case I go down to the market analysis user groups, go into Major Markets Plus, hit Warehouse View, which should bring them up over there. Then I go to T1 View, which is how I rank my indexes, and I could see right away that small stocks are weak. And that's bad for a high growth stock investor. I lost money last week, but I didn't lose as much as the IBD 50, which was down 3.74%, or the Market Smith 250, which is really 300 stocks now, which was down about 3%. Some in the S&P was down considerable, flat after Friday, but it was down maybe 2%. So growth underperformed this week. And I'm a growth guy, which meant I underperformed, but as I said, not as bad as the IBD 50. Quickly looking at the major indexes in HGSI, because that's where I have my indicators. Just want to point out a couple of things. And everything I do in this is available in the program or in updates that will be coming. So the S&P 500, we talked about it sort of being stalling. You can see a new weekly bongo popped up. There's been no kahuna in the last couple of days. When we get the lowest in the high jump is my low jump indicator. And it actually is pretty reliable that if I get down to this as low as it's been, the market bounces, and we're not there. That's the point of that. No Eurekas, no Phoenixes, so this is weak. The Dow Jones Industrial, a little bit stronger, but they have a lot of energy stocks, and it's just sitting on the 200, a little bit stronger, excuse me, a little bit weaker rather, but sitting on the 200. What's going to happen there? The NASDAQ, which had been stronger, and you can see it's sitting above the 50, and then the Russell 2000, which has been the strongest, although this just changed it. So we'll look at the small caps, and you can see it also sitting above the 50. Add the Russell 2000 back. So let me do that real quickly. I'll do that later. No, I'm going to do it right now. So if you want to add like the Russell 2000 to this list, it's RUT, I think. Or maybe it's dollar, or let's type it in. You know what? I know what it really is. I forgot that RUT is not in this anymore. So it's the IWM, and I'm going to add it, and there we go. So we got the Russell there as well. Where else will get incorporated, and we'll be able to see where Russell's sitting. And you can see Russell sitting right with the small caps. And then again, very quickly looking at the dollar. A little bit weaker this week, and as I mentioned before, it's got a kahuna to the downside, struggling at the 200. This is the ETF, which actually looks a little bit stronger, higher than the moving average than the futures do. And then the VIX, let's leave it on the weekly. You can see the VIX had a big move this week, closing right above the 200, so it'll be interesting to see where it's going to end up. And then lastly, if the dollar is struggling here, will we see something happen in gold? And I got to tell you, there was some interest, some stirring in gold this weekend, a little bit of move here on Friday. And silver, similar as well. So it'll be interesting to see what happens with gold and silver. Now, once I've done that, I go to 7, which is industry groups at warehouse, and you can see I've got 174. I want to know momentum, which ones are moving up. I've got 47 using the 2-day force up, and let's rank it by that. And then how many are moving down? I'll do the 2-day force down. I've got 12. So that's a bullish feeling, although, as I said, I'm still a little bit nervous in this market. Specialty apparel footwear were weak a week ago. They stayed weak this week. Electric, entertainment, IT, department stores, healthcare supplies, PC insurance, not surprised because of the interest rates. Let's take a look at where the strength is. And you could see pharma, exploration, oil, biotech, metals, application. So, and then somehow diversified banks, interestingly, made it to number 9. So we'll take a look at that. Specialty pharma, if I right click, I did the mistake and I double clicked. I don't want to double click. I want to right click. So if I right click on specialty pharma, you can see what's in this. And let's very quickly look at, see if any of these look like they're buyable or interesting. One of my favorites is number 8. Pull this out here. And let's go to my stock view. So this is Gemfire Therapeutics. I don't know anything about who these guys are. What I know is they had a Bible gap up, a mobile breakout from a squeeze, and a kahuna. Group break is strong, doesn't make any money, loses money, lots of demand. It's worth right-clicking, more info from web. Oops, I hit the wrong one. Try this again. More info from web, FinViz, and it'll bring me up news on this specific ticker. I can see it's been in a longer-term downtrend. Okay, they had a trial that was positive. Now, I wouldn't do more research, but there are rules of how to buy a Bible gap up. I probably would pass on this stock. I don't like its average volume. Global Blood Therapeutics, I'm going to be nibbling on this stock. I've been nibbling on this. They had some positive data in sickle cell disease as a hematology oncology specialist. I did take care of patients with sickle cell anemia. It's a horrible disease, and they have the first therapy I've ever seen that may actually change their life, sort of a transplant or some other therapy. So I'm interested in them. There's some toxicity. They still got to get approved. I'm interested. I'm going to start buying it down here, more on the story than the chart. The chart, I'd like to see some momentum come in. Shire, big company. I think they are being acquired, so I'm not going to do much there. Kira, another small biotech, right click, Morpho from Web, go to FinViz, and I think they had some positive data on Wednesday, so let's see what we can find. Positive trial. So now becomes interesting. Again, you need to do your reading. This one looks interesting as well. Zach, again, don't know anything about this one. Nectar, this is what happens when you go to ASCO and your trials turn out to be negative. Boom. The downside of owning biotech. Here's one that has been good for a long time. It's a little loose now. Supernus, love the earnings. Had a pocket pivot on Friday out of a squeeze. I may be looking to add to my position. This earnings are not till August 1st. So I will go through typically the top 10 groups and see if there's anything that looks worth buying. Exploration and production. I liked a lot of these last week, and as I'm sure you know, they outperformed on the week. ConocoPhillips, sort of chopping around here, moved up on Friday and then closed below the midline. Great earnings per share growth, pays a 1.6% dividend. Has more pure play oil, Canadian Natural Resources. Apache is one that I currently own, breaking out as well. So it would be nice to buy some of it before they broke out, but this group is strong, and as long as oil prices stay up, they'll probably get stronger. I don't personally believe that the current pricing factors in the current price of oil, so they may have more room to go, and I think the oil is going to outperform some of these stocks. ExxonMobil, the integrated oil, so now you combine refining, exploration, pipelines, and retail. Going sideways here, had a big move on Friday out of a squeeze. Good earnings per share growth, pays a 4% dividend. Chevron, I've liked these for some time. Going sideways, pays a 3.5, great earnings coming in. Now this is interesting. Petrobras pays a dinky little dividend, but their earnings per share growth is about to explode. This is a high close doji on the weekly, I think. Was it a high close doji? I can't remember. It's almost a high close doji on the weekly. It reversed off the 200 weekly day moving average. Anything you buy that's in Brazil is higher risk, but here's a stock. While the rest of the oil patch has gone up, this has lost about 40% of its value. It looks to me like it might be done going down. It might be worth doing a little play on. Suncor, another integrated, it looks like it's moving out of a squeeze. Kahuna's mobile breakouts from a squeeze, pays a 2.7% dividend. Fourth group is biotech. As I noticed, they were all green on Friday. I had talked about Vertex last week and Regeneron. Both had good weeks. Vertex, which was going sideways, broke out on Friday with a viable gap up. It has good earnings per share growth. This might be interesting to watch and maybe play. Acceleron had some positive news. I don't know if they have the drug with Celgene. Let's see. I think their drug is with Celgene, Lusadarept or something like that. Yep, Lusadarept and beta thal. Another bad blood disorder. So positive data. I think Celgene already has a stake in this company. Already broke out and ran. But how about buying Celgene? Celgene here has got a higher low. Needs to get some higher highs. Had a kahuna, pocket pivot, a mobile breakout from a squeeze. Is trading at a multiple equal to its growth rate. I've been a long-term friend of Celgene, but I've been out of Celgene since back here. One of my first big calls on the HGSI board was to load up the farm when it was about 30, and that was 3 or 4 splits ago. Let's go into my screener here. And let's take a quick look at Celgene and see if I want to buy some Celgene, etc. So it had a new PPS buy signal come in. It's still in a PPS sell. This is bothersome. It's in a downtrend. It did have some MACD divergence on this lower low here, which is interesting. Coming out of a squeeze, new PPS buy. It's not optimal. Notice how the OBV on the weekly is taken off despite dropping. I am thinking about playing a little bit of Celgene, but it's not without risk. Exelixis had a good move this week. I don't like the earnings after this quarter. Here's Regeneron, which I mentioned the last couple of weeks, broke up and is lazily moving back towards its 200-day moving average. I right click here and go back. Precious metals, falling dollar, these might be good. And I mentioned that I've started nibbling or may nibble in American BIX as one of them. Just take a quick look. And you can see a high post doji occurring on Friday, pocket pivot, Kahuna, mobile wake up from a squeeze. Some earnings coming in. Newmont Mining, Tech Resources, they all seem to be bouncing. Maybe something to play in there. I usually go down through the top 10 in the essence of time. I'm not going to do that today, but I am going to jump at diversified banks. These surprise me because if you look at JP Morgan, look at Bank of America, they don't look so hot. And this doesn't look very good either. This is Wells Fargo, shooting star here. That's not usually a sign of strength. Here's Citigroup, pretty deep in the pattern. I don't know. I guess they closed up on Friday. It's hard to believe it. They were up 4 cents. You know, the reason why I'm not big on diversified banks, besides the falling interest rates, Bank of America breaking down below 28 eventually, and then or towards 28 in JP Morgan. Similar pattern in Goldman Sachs. Those don't look bullish to me whatsoever. So I did this the upside to the downside. I added my top-down review to my bottoms-up review. And let me just share with you over the last couple of minutes some of the stocks that I'll be following this week. Not that many. Usually there's a lot more than 35 stocks. So one thing I like to do is I like to look at what industry groups they come from. So I had a couple of ETFs that I'm interested in. You know, preferred stocks, they have a dividend. Some people like to play them. They perhaps perform more like a bond. And what got me interested here is a couple of pocket pivots, a mobile breakout, a 5.7% dividend. If I want to find some growth for my portfolio with a dividend and some safety, maybe it's preferred stocks. You could see over the year they've been they traded a very minimal range, putting out a 5.7% dividend. The Qs, you know, how do you play the market if it drops? You can find individual stocks. You might look at certain ETFs that you could play. The Qs would be ultra short liquid. Not doing anything yet, but I'm going to watch them. I've done shorts of the triple Qs on the upside as a way to play the market when it rolls over. I like to short expensive things rather than buy inexpensive ETFs. And the one I did the best on, unfortunately, doesn't work for me anymore. That was SPXY. This made me a little bit of money because I was short this when it died. Sometimes you get lucky, but those who've been following me for a long time know this is the instrument I like to play to hedge against the market drop. And I did, and now the instrument's broken. Some chemicals came to the tops. Win is not a high growth stock chart that says go out and buy me. What Win is a stock that I sometimes will bottom fish, and obviously that's not Win. And Win is pulled back to the 200. It's had a little bit of a reversal after a bingo, which is sort of the baby out with the bathwater. I like the earnings. I like Win long term. I will probably be watching it here. Best is a relatively new IPO courier stock, but a pocket pivot, a kahuna, a mobile breakout from a squeeze sitting on the 50. That's usually my buy signal. Mohawk is all in the housing. The carpeting and flooring, if housing stocks firm, well, what's going to happen here? And again, kind of like Petrobras, it's been beaten up. It's going sideways. Maybe it's something I might want to nibble here with a kahuna coming in. Many of these are stocks we looked at before, and I think that's going to about do it. So let me just leave you the list to take a look at. These are the ones that I'm going to be following. Not all of them are great stocks. I break this down into categories, and I have some bottom fishing. And this one I thought was interesting. Notice that there's a number of real estate stocks and REITs here. This is one that leases property to the government. You would think that would be a safe investment. Let's put it on a weekly, because you'll see the range here is not very big. It's pretty much a sideways stock since the IPO date. It has a dividend of 5.3%. It's got some major earnings per share coming off. So could it afford to pay $1 dividend? Well, you multiply those numbers by 4 or double them, it's $1.20. So that looks like that might be a safe place to hang out as well. So these are the ones I'm looking at. I am not enthusiastic about this market. That can change in a dime based upon news. I haven't looked at anybody else's reports or reviews, so those are purely my thoughts, subject to change based upon news that occurs before the market opens. Y'all have a great week. Good night. Bye, everybody, and have a happy and safe 4th of July.